welcome to your budget trades and just the penultimate weekend ahead of the big event, the Union Budget 2016 come Monday morning. The third budget by Arun Jaitley. Let's see what he delivers. There is a whole lot of hype and talk around whether or not there's going to be a dividend tax, long-term capital gains tax in an otherwise extremely spooked out market because of the global volatility. Well, traders, investors alike are extremely jittery ahead of Monday.
Yeah, actually, I think the good thing that has happened is that a lot of this stock has already come out in the market. So maybe the market is a bit prepared. Had it been a bolt from the blue, it would have been different.
Yeah.
But if he comes out with, say, a capital gains tax, but if it's layered over a few years and it's prospective, then maybe the market shouldn't take it that badly. Nothing. I mean, dividend distribution tax is anybody's gain. So somehow the only thing is the feeling that I get is this budget somehow from our perspective has become a lot more about what taxation changes come in as opposed to what happens on the fisc, on the borrowing and so on and so forth. It's actually become just a tax budget.
Yeah, especially given the kind of market environment and the mood that we're currently in when there is Brexit, Japanese yields going into negative, still a question mark on what US is going to do about their rates, and China being the black box it is. So it becomes extremely critical. So we've got our three wise men lined up to tell us exactly how to trade this big event. That's the budget. And we've got with us Siddharth Bhamre joining in on the show. Also got Mitesh Thakkar as well as Dr. C.K. Narayan to get us perspective on that.
So quickly tell you, just before we get into our experts, quickly just tell you that this week has been a slightly iffy week. We had a very good previous week, 3.5% gains. This week we've lost about 2.5%. So we could actually argue that the market is going into the budget slightly light, and which is actually not a bad thing. What's the gainers and the losers will come up on your screen, but predominantly keep in mind that Feb was a brutal month for banks. Feb was a brutal month for the markets. And this week has not been any different. And therefore, if indeed there are positives that come in, it will only be upsides for those specific sectors. As you can see, hardly any gainers this week. Some of the top gainers have a percent and a half, 2% kind of gains. But if you look at the losers, the kind of losers were very, very large. Even on the index, even on the broader markets, some of the stocks that lost had quite a bit of losses, 6.5% for a BHEL, NTPC about 6.5% as well. So just that, it's a good thing that the market is actually entering the budget event fairly light.
Okay, let's find out from Dr. C.K. Narayan how best to trade the Nifty come Monday morning. C.K., hi, good evening. What does one do? Just wait and sit out for the big event and then take a positional call on the index? Or do you think the screen and the ticker is already telling you what to do?
No, I don't think the screen and ticker is telling us what to do, because my reading of the market is that we are going into this budget session pretty light in terms of positions, and as well as in the Nifty as well as in the stocks. I think considerable portion of trading longs were let go of in the last clearing. I did also see some unwinding of arbitrage positions. So I think we are going into it pretty light, so we will not have any significant trading prior to the completion of the budget speech, which should be somewhere well around 1 o'clock or thereabouts. So I do believe that the morning session on Monday will be a bit range bound, and I think it'll be the die-hard guys who will keep at it, and the cowboy sorts who will want to respond to every squiggle in the market. All the best to them, because that is not what real trading is about. That is just indulging in your hobby or your passion for being active in the markets. So my suggestion would be the prudent thing would be to wait for the budget speech to get over, for about half an hour of trading to go, and then look at what the market has done with the pieces of information that may have been received and digested by then, and begin your campaign probably around 2 o'clock or so, by which time some degree of clarity should be available and the prices will actually set some kind of a trend. Whatever levels may assume themselves at that point of time, I think we'll have to take it dynamically. It's very difficult to decide much in advance what they would be. We may have some indicators, but not too much beyond that.
Right. Siddharth Bhamre is with us as well, and Siddharth, the prudent thing would be to go into the budget event light. Maybe the market has done that as well. What do you think happens in the run-up, those 2 hours before the budget, and how would you approach trading?
Hi Neeraj. Yeah, from statistics it is visible that market has gone bit light, and that's the reason we have seen less rollovers in Nifty, both in terms of percentage as well as in terms of open interest. But same I cannot say for Bank Nifty. Bank Nifty has seen huge formation of short positions in last series, and those positions have got carried forward. And though everyone would be talking about how banking sector has underperformed, but then wherever there are more short positions, that is where short covering comes, and that's the reason we have seen today that how banking stocks and Bank Nifty did far better than other indices. I think that kind of outperformance may continue for first 2 hours on Monday also. But according to me, you need to take some kind of positions when you are going ahead of such mega events. I feel budget may not be as negative as what people have been talking about, and I think the most talking point of this budget has been, or pre-budget has been, that long-term capital gain tax. I personally feel that that may not be the case, and if that doesn't happen, you might see market giving a strong bounce back of say 3-4% post budget. To play this strategy, I would suggest to form a short. I would like to form a strategy which is called ratio call spread, where I am suggesting to go long in 7,000 call option and sell 7,200 call options, where your break even would come above 7,400. It's unlikely that even after post budget market would go above 7,400 odd levels, but I would like to form this strategy before budget and go into the budget.
Okay, let's also talk about the top stocks that are likely to have a budget impact, and the predictable one which we're going to start off with, of course, is ITC. Excise duty may be hiked to the tune of about almost 15%, which will be neutral for cigarettes, and anything higher than 15% is going to be negative for makers like ITC. And we've seen how pressured ITC is in any case been. Besides the bit of a rebound that it saw in Friday's session, ITC this week alone has managed to lose about 4.5%. We've seen how aggressive the government clampdown has been on cigarette manufacturers, and ITC is bound to get impacted. CK, want to come to you then, a strategy on ITC in light of an excise duty hike which may come about?
Well, I think these are all expectations, and then history has proved that those expectations come about more often than not. So therefore, ITC responds negatively most of the time post-budget. This time ought to be no different, or perhaps even more heightened, considering the fact that ITC has already been dumbed down a bit and is actually trading at 52-week lows. I think any rally that we may get, today there was a very, very mild rally. It looked up to about 292.93. I think at best before the budget, even if some shorts were to square up, I don't believe we'll see anything further north of about 297 to 300. So I think going into the budget speech and going into the event, I would be short in ITC.
Okay.
I think the odds favor being short.
Okay, Siddharth, very quickly to you, SBI, the FY7, I mean, a lot of talk about this PSB recap, bankruptcy code, etc., and divergent moves there. How would you trade SBI?
So we in last series also sold 150 and 160 put options in SBI. We made entire money in 150 put, 160 put, whatever the losses were, around 8 rupees, we went long 152 at 152 levels yesterday in futures. So that is in the money. I would strongly again suggest people, those who are looking to buy SBI at lower levels, to sell 140, 150 put options because IVs are very high, and I am not expecting SBI to go significantly below these levels. As far as FNO data is concerned, we are not seeing any kind of incremental short positions which are getting formed. Yes, rollovers are in line with averages, so those short positions formed from 180, 190 odd levels, those short positions are still standing. People have rolled those positions, but we haven't seen incremental formation of short positions in SBI of late. So I would suggest, I'm not saying there is a V-shaped recovery which I'm expecting in SBI, but from options perspective, and SBI is one of the most active stock options underlying. There clearly I'm suggesting to sell 140, 150 put options and pocket in money for March premium. You won't see this kind of premiums once budget is behind us.
Well, L&T surely is going to be in focus as well come Monday morning, considering there is likely to be fresh impetus for the National Infrastructure Investment Fund. In any case, the government is likely to have a major thrust on transport, power and defence. That's going to be a priority. And L&T, considering it's spread out across these sectors, is likely to be a beneficiary. But CK, given how damaged L&T was post its earnings and hasn't quite managed to recoup all of its losses, how do you go about trading L&T? Is it a blind buy right now?
Oh, absolutely not, because L&T has been really caving in for a long time. The only thing that I can say to its credit is that over the last about month or month and a half, the stock has stopped falling, even though there was a spiky move down. But then if you take across about a month, it's been largely consolidating near the lows. So I think that is something which is probably indicative of selling getting sort of petering out a bit. But then what we need to really see is not just something reaching support, but something finding strength at that level of support. And that is generally indicated on the charts by the stock successfully staging a breakout. And in the case of L&T, I think that would be somewhere in the region of about 1150 plus. If the stock were to move well past those levels, then I think we would have the first indications that it wants to go up. So I would wait for a decisive move past 1150, 1160. If I see that and couple that up with a steady market, then and only then I would be encouraged to buy into an L&T.
And you know, housing finance companies have shown their hand. In Friday's session post the economic survey, I think all of those stocks went up in trade. This week, the HDFC chart pretty much indicating that as well. The Friday move was particularly impressive for HDFC, for LIC Housing Finance, for Indiabulls, for DHFL. And if indeed there is a likely rise in that Section 80C limit from 2 lakh to 3 lakh rupees, then that should augur positively for demand that comes in for some of these housing finance stocks. But Siddharth, I'll choose the more liquid one, HDFC. Actually, for that matter, some of the others are very liquid too. Would you trade any of those? How would you prepare for these trades on Monday morning?
So my technical team has just initiated long HDFC trade, and reason being they have seen a good bullish candlestick pattern getting formed on expiry day. And yes, today stock did open gap up, but didn't see much of follow-up buying. This is one stock where there's a lot of institution holding, and recently we have seen short formation over here in SDFC. But these are not naked shorts which are getting formed because people feel that there would be a substantial downside. I think this is hedge against the portfolio holding which FIs are not liquidating. See, everyone Neeraj is talking about how FIs are selling into this market, but look at the quantum which they are selling, barring expiry days figure. Otherwise 300 crores, 500, 600 crores, this is just a drop in notion compared to the kind of holdings they have. We have seen in falls that when they come for actual selling, every day they sell 2,000, 3,000 crores in cash market. So in front of this 500, 600 crores is very meager figure. So why I'm saying this data, because HDFC is one of the strong stock holding by FIs. So someone who's seeing that in FNO there's a lot of short positions which are getting formed, I personally feel that it is more of an hedge position rather than a naked short position. So I won't have negative opinion on HDFC Limited, and will go by what my technical team is saying and would trade with positive bias.
And on that note, we're going to take a very quick break. When we come back, top budget trades for Monday morning from both our experts.
Right, back with your trades, the budget special, and to make it more special, we also have Mitesh Thakkar with us now. So, three experts, about 6 or 7 ideas for you to benefit if you are indeed looking to trade the budget day. Okay, thanks so much for joining in, Mitesh, as well. Let's start off with your first idea, Diwan Housing. Why would you trade this one on Monday, Mitesh?
I think, basically it's just a situation when technically the stock was extremely oversold and has given some kind of intraday reversal. Now, I think that the reversal could see the stock price go to about 160, 161. That would be the primary target, and then we can even look at targets of around 167. So, from a risk reward point of view, this is a good buy with a stop below 149 for people who are trading at the 1-2-day kind of pricing. Also, is the fact that housing finance companies will have some kind of positive tailwind with the budget most likely, and the pattern certainly suggests that.
CK, what stocks are you looking to trade for Monday?
Well, the two stocks that I've sent in actually are not with a perspective of Monday, because I think there was slight miscommunication. My understanding was that this was to be a post-budget. What do you think across a longer term? So the two picks I've talked about are from a longer term perspective. First of them is Balrampur Chini. I do believe that sugar stocks or sugar sector will be largely immune from whatever happens on budget day, and the trends being very strong in the sugar pack. I was looking for a medium term at least kind of investment in Balrampur Chini at the current price around 80, with a target around 110 to 20 across at least a quarter or two. And the second stock was of a similar nature, was from FEAM Industries, which I think has completed a decent corrective pattern over a period of time of the last few months, and has come down to a zone where it has built up a decent support at about 575, currently trading somewhere at 680 levels or thereabouts. So I think FEAM is something which will also do pretty well across the next 6 to 12 months. So I think FEAM is another budget day or post-budget day kind of investment bet. I think there also automotive lighting system should largely be unaffected by whatever comes up in the budget, and I think their foray into LED would also be largely unaffected by whatever comes up in the budget. So I think these are two investment bets that I am recommending on budget day or thereafter.
Fair call. Siddharth, your first idea for the day is a Reliance Capital. Why do you like this one?
Yeah, Neeraj, what we have seen that in month of Jan and Feb, the stock corrected along with market, and correction was quite steep. But unlike some of the names in banking space or infrastructure or metals where we have seen huge shorting which happened, Reliance Capital didn't see much of shorting. And mind you, before Jan, the stock has created a bottom and was showing a significant uptrend. But Jan and Feb generally were bad for market. The stock corrected along. I personally feel that there might be something which is positive coming up for mutual fund industry in this budget, which would have positive impact on names like Reliance Capital. And apart from that, I see that there is a good support to the counter at current levels of around 315, 310 odd levels. So I'm expecting a bounce back, not in form of short covering, but in form of long position, and to take this stock higher. I have very aggressive price targets, but as of now I'm restricting myself to 376. Fix a stop somewhere around 309 and go long in this counter.
Mitesh, you have a sell call on TVS Motors. Why is that?
That's right. I think if you look at the charts for the last few months, we've never had a weekly closing below 268, 270, and that has acted as a very strong pivot level. We've this time got a weekly closing below those levels. Some negative crossovers of the indicators on the daily as well as weekly chart suggest that there's a more likelihood for price correction. So I would look to sell this one with a stop at 273 for targets close to about 252.
Okay. And Siddharth, looks like I'm asking all the questions to you, but ONGC is the other one, and you have buy call there.
I'm certainly not minding that, Neeraj. ONGC, we have seen, Neeraj, that last 2 weeks we have seen significant upside from lower levels despite market being choppy. One can give reason that crude oil also has stabilized and Brent is now at 35 and showing signs of stabilizing rather than the kind of volatility it showed in last 1 month or so. At the same time, we have seen very less rollovers happening in ONGC. This is the stock which has again underperformed, but then rollovers have not happened, which clearly suggests that shorts are no more interested in or they are not seeing much of downside in ONGC from current levels. I'm not expecting that this stock will give you a very high returns, or I'm not having a target price which is like 15-20% from current levels, but I'm expecting this bounce back to continue. There are still some amount of shorts which are standing, and as crude oil stabilizes, I feel these shorts would also start covering in coming week. I don't know whether how much impact of budget would have on this sector or this underlying, but purely from F&O data perspective, I feel that there is an upside. I'm expecting stock to bounce to 235 odd levels. One can fix stop loss somewhere around 207 and go long and trade with positive bias.
Okay, gentlemen, all of you, thank you so much for taking the time out and joining us. And as difficult as it is to trade stocks ahead of the budget, appreciate you sticking your neck out and giving us some thoughts and some points to ponder on as well. Thanks so much for being with us today. Well, that's really the technical might of ET Nav, giving some ideas and some thoughts on what to do and what kind of trades that one can place on. I'm looking forward to Monday, more importantly because I want the event to be done and over with.
Yes, it's so much hype and hoopla around it, and just so much volatility that people are gearing up for. Just Friday morning, you were highlighting what the F&O picture is like and how there are positions built in around 7,000, sub that, and even 7,200. So just shows the kind of wide range and the volatility one should gear up to face come Monday. 7,500
actually. Mind you, a lot of budgets, while the close is always flattish, about a percent and a half, the budget day volatility could be as high as 8.5%, as happened I think in 2001, or even 6.5% as happened I think in 2008 or 2009. So we could well be in for an extremely choppy day of trade.
And especially considering it's going to be so stock market specific, if the long-term capital gains tax comes in or doesn't come in, we may just see a relief or then a complete hammering of stocks. Okay, we will wind it up then in this edition of Your Trades. And enjoy the weekend and see us on Monday morning. It promises to be an extremely action-packed day.